Let's just talk about the nuances of the FMCG space. Why exactly are FMCG stocks buzzing? What is really the factor behind the rally? Amnish Aggarwal, Head of Research at Prabhudas, Lilladher, joins us in the show right now. Amnish, hi, morning. What's leading to the FMCG revival? Be it Unilever's numbers, be it Tata Global, Westlife, across categories, you've seen some, tremendous earnings recovery.
Yeah, morning Aisha. I would say the recovery has been, it's more like P multiples getting re-rated. The numbers have been just in line or maybe slightly better here or there than what market was expecting. So I think it is again your flight to safety, hopes on the revival in the economy, and being the bellwether sector, I think it helps a lot.
Amnish, I'll come to the valuations angle in a bit, but the one thing that has really aided some of these FMCG companies has also been the fact that commodity prices have been on their side. So keeping the RM prices under check. What when commodity prices actually rebound? Do you think these gains would then be taken away?
You see, the FMCG commodity basket has to be divided clearly into two parts. First being the crude linked commodities, which have been quite benign, and the way crude prices are behaving, these commodities will remain favorable for FMCG companies. And when it comes to agri linked commodities, those commodities are actually firming up. You look at the prices of wheat, may it be sugar, may it be palm oil, the prices there have gone up quite steeply. So I think the FMCG commodity basket, as far as your agri prices are concerned, I think it is likely to remain firm. And if the global growth concerns re-emerge or remain where they are, crude prices are likely to remain benign. So one will have to clearly look at a different set of companies who will benefit and who will be losers at this point of time.
There was an argument that perhaps some of these companies are already trading at very high multiples. Do you see that as a deterrent for investors, or are you confident that they will just continue to grow from here on?
You see, FMCG as a sector, you can look at, there were two phases. There was a phase, say, during late 90s when the stocks traded at multiples like these. So some of these stocks are at those multiples, or even some of them might have crossed the multiples which they achieved at that point of time. But having said that, if you look at companies in general or the major companies, today one can say in one line that they are trading at lifetime high multiples and lifetime high margins. So from the margins which they are making now, incremental gains in margins are likely to be far more muted than what we have seen in the past few years. And I think the commentary of most of the companies, whether it is a Unilever or a Dabur, so all the companies operating at 20-25% kind of a band in EBITDA margins, lifetime high profitability. So I think margins have very little room. So based on that, I think the expectations from the sector remain positive, but they have to be more in sync with reality.
So, Amnish, what is it that you anticipate is going to really happen? I mean, we've seen Unilever climb up 7% month to date. Similar has been the movement on a Nestle as well. United Spirits has held up about 6%. So has Tata Global or a PNG for that matter. Do you sense that these stocks may be close to topping out, or do you think they will continue to hold on to the gains because new investors would join into the bandwagon, irrespective of what valuations they quote at?
You see, if you look at what has been happening in the consumer as a sector in the last 10 years, their earnings growth has been relatively steady if you compare with the rest of the market. Plus, the sector has got re-rated massively, not only in India but globally. Now, if you look at that backdrop, the total investable companies or the surplus companies where actually the incremental money can come in has gone shrinking over the years because of you can say the other sectors not doing well or various problems with other companies. So the money has continued to come in the consumer sector. And at this point of time, I think one big incremental which might have been working in the favor of these companies is the way taxation has been increased on cigarettes. Because ITC is one of the top 4-5 stocks when it comes to market capitalization, and it has got a fair bit amount of free float also. But this year's increase in excise duty on cigarettes, so that has become I think a big negative for that company. And if you couple that with the global outlook of investors that they don't want to invest in, say, tobacco stock and some of the other segments because of the ESG considerations. So if some money goes out of ITC, then the other consumption plays who are good, who have been more steady, and where there is a long-term visibility. So these stocks are attracting some amount of money due to that, in my view. And as the number of stocks in the investable universe is limited, plus the global problems, the problems in China, which can impact growth rate in some of the other Asian markets, I think some of, not only in consumption, broadly some of the other good stocks, they will continue to attract money, and that money flow might increase even as we go forward.
Okay, fair enough. So, just taking that forward, what you were talking about just now in terms of some of the global factors, do you see any pressure also building up, or not pressure, but do you see margins peaking out as such as we see a recovery when it comes to commodity prices?
You see, as I stated, it is going to be very company specific. So, for example, the companies which are using more of the agri raw materials, for example, which directly goes to the food companies. So, their margins have already been coming off. From last 2 quarters, Nestle's gross margins have been under pressure. So, the gross margins of maybe say Britannia will also come under pressure. Liver is also feeling the heat of increase in the palm oil and consequently PFAD prices, and they are indicating to take say 5 to 6% price increase in toilet soaps. So there will be segments in which your raw materials are going up, and so consequently the companies will have to increase the prices or their margins will come off. But on the other hand, the companies which are based purely on the, you can say, crude or the crude linked commodities, for example, something like all the paint companies, Pidilite kind of companies, so those companies stand to gain. On the similar front, you can look at the say the QSRs like your Jubilant Foodworks, etc. Because of the increase in the cheese prices and other food prices, their margins have also been under pressure. So I would say that it is very, very company specific, but broadly, if you have to demarcate all the companies which are dependent upon the agri commodities and food companies, their margins are likely to see some pressure in the near term, whereas all the companies which are more, their raw materials are linked more on the crude side, they are the gainers at this point of time.
Good to have you on the show. Thank you so much for really analyzing what's going on with the entire FMCG space. Been on a tear, and there's no taking away from the gains. Not just pure play FMCG, but across categories, you've really seen these stocks hold out very well, irrespective of the rich valuations that the stocks have been trading at.